Hello, Oracles. How is it going today? It's our 420 live stream. Again, I'm going to be doing this today and tomorrow, just trying to practice for what I'm going to be doing in the future for when I do this full time. So earlier today, I did put out my Tesla and Air video for all of you guys. I know I had mentioned I was going to put it out. So that is out. You guys can check it out after the live stream or whenever you get a chance if you want to see it. I'll wait for you guys to get on. We'll take a look at the charts and everything that's going on. We'll take a look at CPI expectations, PPI expectations. Looking at the stock today, pulling down, we actually did fill that gap down in the 265 range today as well intraday. So that has been filled. So we'll discuss some of that. And, I was talking with Gort, looking at, again, our discussions of, is this just a small pullback to fill a gap, or is this the actual pullback that we're going to be seeing? So we'll take a look at that. And again, my thoughts on that are just, we're going to fill gaps and then we just monitor from there. We came down from 314 all the way down to 100. It was filled a gap, waited, filled a gap, waited. It just kept on dropping. So is it going to happen again? Don't know. We have to wait and see. Melissa, yes, you made it on. Excellent. Good to see you. Good afternoon, Stephen. How are you? Lang, what's going on, my friend? So looking at, I'll jump into it in a minute, give you guys a few minutes, but little dip, not a big deal. I did add more to my TSLY today. Hey, Sith Lord, what's going on, Moose? Hey, Karan. So I added more to my TSLY, and the reason I did that is because we've now passed the X date. We saw what they're going to pay out. They're paying out $1.06 per share on these. And if you got in on last week, last minute, it was about $18, but I've been in since about $14 and change. So I did add more on last Wednesday to it, and I added more today. I'm still going to dollar cost average. I don't know if we're going to get a further pullback. I don't know if the payouts are going to continue as they are, but the lowest they've paid out is 44 cents a share. They just paid out this month $1.06 per share, which is absolutely insane. So that's what I'm looking at as far as cash flow generation, especially for anticipating a market pullback. Melissa, what do you make of all the big stocks down today, but the rest of the market is good? If you remember, a lot of the big stocks have been moving up significantly for a little while. So a pullback was kind of expected. And going into the CPI data, that was it. And we're also seeing a little bit of a swing. I also noticed that companies like NEO, companies like Square, companies that have been beaten down for quite a while and really didn't move much, are starting to rebound a little bit. Palantir bouncing a little bit as well. So that to me is kind of what's going on. Some people are just moving money into other plays. Again, it's going to be a very swing traders type market for the next 6-12 months or so. And that's what we're going to end up seeing. And I don't know how far we're going to pull back. I do think we pull back a bit. But I think that's just what we're seeing. As we're seeing the sell-off, we've got, CPI coming out on Wednesday, PPI on Thursday. Raymond, watching Tim's second video of the day. Yeah, this is the live. So I got the Tesla and Air one that I just put out, got this live stream now. And tomorrow morning, I'll put a recap of whatever we talk about today, plus anything new that we get overnight. I'll put out in tomorrow morning's video, and then we'll do another live stream tomorrow at 4:20 as well. So we'll get to enjoy all of that. I'll get to enjoy you guys for a couple of days. It'll be awesome. So let me see. I'll pop the charts up now. We'll take a look and see where we're at here. Get me off of here. Let's see. Make it bigger. There we go. Now you guys can see it better. All right. So again, looking at it here, closing at 269.61, did close that gap intraday. We had a low of 265. So the next gap below here is 235. So again, this is just what I'm paying attention to. Now we're waiting on the macro between now and earnings, which is next week. So not that far away. Between now and then, it's macro. We got CPI and PPI coming out, and then next week is going to be earnings. So where is this going to take us? Are we going to get those margins higher than people expected? Are we going to push up from these levels, or is the market not going to like what we see at earnings and we pull down and fill this gap at 235? again, that is what we have to wait for next week to see. We can get good numbers and still pull back. We've seen that happen in the past also. So, we just have to pay attention to that. I mean, looking at the PE right now, we're at about 79. So compared to where we were at the end of last year, it's pretty high. But many people think that this is low for what Tesla should be for a PE ratio. Hey, it's a lot of it comes down to who feels what way and who has the most power to swing it into the direction they want it to go. So RSI pulling down to the 62.67, perfectly fine. If we continue the trend where we were at before, we go from oversold to overbought to oversold to overbought. Maybe we're heading down to oversold again. Again, don't know. On the weekly, we're pulling down. Monthly, everything is starting to kind of trend downwards. So volume today, let me see, where are we at for volume? My volume is a little bit lower than normal, but I think we're going to see a little bit lower than normal volume going into earnings anyway, just because people aren't sure what's going on. So they're going to wait. Let's see. What's going on, Katie? Yeah, I know. Can't believe it's earnings again already. And it's next week. It's coming up on us so fast. Steven, slightly off topic, but you're looking very well from the pics I've seen on Twitter, mate. Smashing it. Thank you, Steven. I appreciate you noticing. Yes, that's one of my other channels is Oracle Health and Fitness. Been doing that for a very long time. So it's just a matter of time before I got myself back into it. So I'm very glad I did. I'm feeling a lot better. That to me was the reason why I wanted to do it. Like in the mornings, I'd wake up, I'd get out of bed, and I'd be like an old man. And trying to get out of bed like an old man, I was like, oh, like creaking to stand up and everything. And now I don't. Now I can get right out of bed, no problems, feeling a lot better. So thank you. David, oh, that is a surprise. Didn't expect that streaming. Luckily I saw it on time. Yes, and tomorrow I'll be doing it at the same time as well. So this is something I would like to do, is be able to hop on with you guys every afternoon if possible. Yeah. I feel that now too. People are going to wait until CPI earnings and see margin. And I think that's really what it is now. We're going to be controlled by the macro for the next week or so. And then going into earnings, it's always uncertain. Do we get a run into earnings and then a sell off? Do we sell off before earnings? Do we just sell off at earnings? Do we meet expectations but sell off anyway? Do we beat and sell off, or do we miss and sell off? I don't. This is why I do not play earnings. It's such a gamble. I don't like to play the earnings game like that because it is so uncertain. I am going to jump into the CPI information here for you guys too. Let me see. Come on. There we go. That's what I wanted. Much better. Beautiful. All right, cool. All right, let me get up the CPI data so we could take a look and see what we are expecting. So looking at CPI expectations, I mean, again, last month we had an expectation of 4.1%, came in at 4%, and we're now looking at a forecast of 3.1%. So significant drop. And Elon's been talking about deflation going on. So yes, this is comparing it to high numbers last year. So this is why I also look at the month over month data. So I'll jump into the month over month, which I believe, no, that's PPI. What's this one? Sorry, I had them all up here, but not, there we go. Much better. So PPI or CPI month over month, we're looking at a 0.3%. So that's still up from last month. So, but again, that's still kind of in the range. The PPI wants to be between 0.1 and 0.3. So that's still within the range that the Fed wants it to be. So are we going to meet that? Are we going to beat that? That I think is going to be the big one, is the month over month, because year over year, we're expecting it to be low. Just because we're comparing it to last year, but the month over month is the big one. And so CPI at that level isn't too bad. That's the higher end that we want to see it, but that's still within range. Now, the problem is if we end up coming in at like a 3.5% and maybe a 0.5%, that's going to give us a strong indication that the Fed is most likely going to be raising interest rates. That could spook the market. And that could mean no matter what happens with Tesla, we get a pull down either way. So that is why this week could really matter, because that could give us an indication. So again, we've got the CPI, PPI this week. Next Wednesday is Tesla's earnings. The week after that, the Wednesday after that, is going to be the FOMC meeting. So regardless of what we get for earnings, if the macro environment is really anticipating a rate hike, we might see a sell off either way. Steven, how's work been so far this week? I know you had some struggles last week. I've been suspended. So today and tomorrow, the reason I've been able to spend time with you guys, so my silver lining is I got suspended from work for today and tomorrow. So I get to spend it with you guys. So this week for work has been great because I haven't had to go. Should time earnings to Halloween? Yeah, very scary, very scary. And actually, earnings are pretty close to Halloween. It's usually like a week or two before Halloween when we get earnings and for Q2 or for sorry for Q3. Melissa, today I was debating taking profits or hoping for the best Wednesday, not Tesla, my other stocks. Yeah, I've been thinning out a few, but I added to my TSLY today. Um, I haven't sold anything else, but I have CDs. I have 4 different CDs that are maturing in the next couple of weeks. So I'm going to take some of that money and I'm going to re-roll it in there, but I'm going to take a little bit off the table there and hold it as cash to be able to take advantage of any opportunities we see before the end of this month. So that's my plan. So I'm not selling anything else as of right now. I don't have any plans because I've sold pretty much everything I wanted to sell. So right now is a matter of adding and waiting for that opportunity. Yeah, time out from work. And it's honestly, it's total BS. It's frustrating because all I've been asking for is for them to train me on how to do my job, and all they keep telling me to do is go to them. I have to literally call them for every single little issue I have. And I asked my boss, "Do you want me to call you every single time?" And he goes, "Yes." And I go, "That's ridiculous. Ridiculous. I have to call you every time, and you can't just tell me what I need to do so that I don't have to do it." And not only that, like he doesn't answer all the time, or he'll completely overreact to things unnecessarily and make the situation worse than it already is. So I am one of those disobedient children that will just do what I feel is the right thing to do and let him know after I have fixed it within a reasonable amount of time. But because I didn't contact him immediately, they get mad at me. So whatever. There's a reason I'm trying to get out of there. When somebody doesn't value what I bring to the table and pushes me down and holds me back from actually growing to become better, I want nothing to do with that. What do I do for work? I'm a branch manager for a construction rental and retail store, family owned. And I mean, on the good side of things, the company's a good company. It's not a bad company to work for. It's just extremely frustrating, and my boss specifically is a nightmare. And the hard part about the company is the fact that they support that, and that's frustrating. Otherwise, the company has been good to me. There's a reason I've been there for longer than I've worked for anybody else. I've been there just over 9 years. So I don't want to speak poorly about the company overall because they're not bad. It's just the situation and my manager and how he handles things is bad. Let's see what else we got going on. It was funny because I was talking to Nick Gibbs. He had made a post about investing in retirement for the future, and it's something that I learned, and it's so important. The younger you can learn, the better it is when it comes to investing, because time is extremely valuable when it comes to investing and building long term wealth. So for me, I started basically in my late 30s, early 40s, and I didn't really start heavily until my early 40s because I was trying to pay off my debt in my late 30s. And because of all that, I just got a late start. Nothing wrong with getting a late start. I'm still getting there, but the earlier you can start, the better. And if you can prevent yourself from getting into debt in the first place, that's even better. And this is one of the things that I started my business for, is to try and help people of all ages, but especially, younger kids, especially like my son's age. I'm trying to educate him. And as Nick put it, once you realize that retirement is not an age, but a dollar amount, the game changes. It seriously does, because it's not about how old you are. A lot of people just put an age number on it because of the fact that they figure by that time they will have the right dollar amount saved up. But what's stopping you from getting, hey, there he is. What's going on, Nick? Heck yeah. Um, so yeah, that's exactly it. Is if you can figure out how to get to that dollar amount sooner, do it, because then it comes down to the point where you can do what you want to do versus what you have to do. That is true retirement. Not to say that you're not going to work ever, but some people desire to do a different type of work that they want to do that maybe they just don't make as much income from, because that's what they want to do and not what they're actually having to do. And that's what it comes down to, is if you have enough money to do what you want to do, you'll be in great shape. And I try to keep on instilling that in my son. Like, he just started his job, and I keep on telling him, I was like, dude, 10% of your paycheck, just take it and invest it. 10%, put it wherever you want. Put it in, an index fund. If you don't want to learn how to do all the other stuff as well, index fund, whatever he wants to do is fine. I'm just trying to encourage him to invest 10% of his paycheck now, because as a young kid at 16 years old, it's not like he has a ton of bills. So he has no money. This is like a large sum of money coming in that he's never had before. So he doesn't have to learn to live with less. He actually just doesn't have to, he'll just have less coming in because he's investing it. So I'm trying to get that instilled in him. So if you guys have any ideas for me to help instill that in him, please let me know, because I'm working on it. He's pretty receptive. But yeah. Steven, I started investing when I was 25. I'm now 27 and been all over Tesla since. Awesome, dude. Awesome. I love it. I wish I was in younger, but hey, better late than never. Yep. And sometimes you can make up for it fast. If you make some good investments along the way, or you find some other way to, get some cash flow generation coming in, you can make it happen sooner. And it's different pace for everyone. So don't get discouraged if it's taking you longer than others. Some people have a higher debt. Some people don't have as high of an income. Different pace for everyone. You just work out whatever is best for you and figure that out. But everybody has an opportunity to get there. Let me see. Katie, I've always invested in my 401k through my employer, but last year I've gotten involved more in investing in myself and learning. That's awesome. That's how I started too, is the 401k. That's anytime you have an opportunity to invest basically free money, do it. 401ks through your employers are great. Most of them do a match. Mine does an 8% match up to 38%, or sorry, 38% up to 8%. And so for me, I'm getting a match from them. So it's free money going into my investing account. And it's my 401k is not a Roth. I do need to switch that over, but I have my Roth IRA. That's going to be tax-free money. I have an HSA account that comes out of my paycheck as well. Also tax-free money. There's a lot of ways to get out there to make some money on your money. And that's really what it is if you can have your money make you money. And I thought about it the other day. What it comes down to is, if you're in debt, you are paying someone else interest. Somebody else is making extra money on your money. However, if you're not in debt and you invest wisely, you will be taking that interest money from them. They will pay you interest on your money. And that's where I'm at now. And that's what you guys all see from my spreadsheets, is all my freebies. And my freebies are, I'm pulling in now over $200 a month. Not a ton, but I mean, $200 a month for just having my money being invested is awesome. And that's just my take-home money. That's just the, from dividends and CD interest. And that doesn't even include my IRA. My IRA is making even more than that. I'm just talking about my main accounts. Makes a huge difference. And here you go. Yep. Remember, long-term capital gains is 0% tax for the first $83,000, then 15% up to $500K if you're married. So great tips. And it's awesome. And yes, always remember to take into account taxes that you have to pay as well. So like in my main account, that $200 I get every single month is going to get taxed at the end of the year as income. So you do have to make sure you pay attention to that. Raymond, that's why I listen to Tim, not investment advice. Nope, not investment advice, not financial advice, but it is a potential financial suggestion. That is what I provide, is potential financial suggestions. PFS. Yep, and that's what it comes down to also. Really late, I started investing when I was already 45. Now I'm giving 120% to compensate. Me too. I live very frugally. I'm in a small apartment with no AC. I'm sweating my off right now. So it's not fun, but it's worth it, because like, you guys who see, my net worth has gone up significantly in the last 2 years. So if you can sacrifice, a few years of time for a lifetime of freedom, totally worth it. Absolutely worth it. And during the time you're in there, you'll get discouraged, and just remind yourself it's worth it. And then when you get to that point where you need to be, you'll understand, and you'll be grateful that you did it. Do you guys in America get a state pension, or do you only get what you put into it? Depends on the job. Some jobs have pensions. We don't have a lot anymore. Most government type jobs, state, federal jobs do still have that. Some other companies do still have pensions of some sort. Um, a lot of other jobs don't. That's why we have the 401ks. As one of the things I spoke to my dad about when I was working was he worked for the post office, so he would get an annual raise and he would get a cost of living raise. Plus, he had a pension. So that's he's living on a lot of that right now, and then he does a lot of the investing himself on the side. And I'm like, for me, I don't have that option. If I don't invest in my 401k or other sort of investments whatsoever, I'm working until I'm dead, and that's it. So it really depends on the field that you're in. Yeah, Karan. And this is the other thing too about starting early. Started investing at 28, took a big L in 2015 when I was 32, took a break after that and started again at 39 in 2021. The benefits of starting when you're younger is you have an opportunity to take some more risks. So you can play it safe and maybe take a little bit longer. But if you start in your early 20s to invest, by the time you hit your early 30s, you can have FU money. That's what I was talking with Gord about the other day is having FU money. I just tell my boss, hey, I don't need you anymore. You don't need to be in my life. I have enough money to take care of myself. If you do it right, by the time you hit your mid 30s, you're good to go. As long as you watch your spending, do your investing, and then you can live your life however you darn well please. You've got family, spend all the time with the family that you want. You don't have to miss kids' soccer games. I missed so many of my son's soccer games while he was growing up because I had to work. And I really wish I didn't have to do that. And that's one of the inspirations I have behind getting myself to where I'm going because I don't want my son to ever have to make a decision between whether he has to choose between family and work. And I don't want him to ever have to do that. So I'm trying to build up generational wealth and teach him how to do it on his own so he never has to make that choice. Let me see. Isn't it easier to invest in US more wisely and with more opportunities than in Europa, for example? I'm from Denmark. I'm not as familiar with all of that from other countries. I do know that we do have a lot of great opportunities here. We have like most other countries I know of don't have ways that you could do fractional trading, which is great for people who don't have a lot of money. So fractional trading is huge. So I know that you guys don't have that. Some countries don't have like 401k plans or some retirement type plan. Most have them of some sort. It is different in all different places. Some places have it easier, some have it harder. I do think that the US is one of the easier places to do that with, though. Is that my castle in my background? Not mine, but is the inspiration for what I'm looking for. I would love to have a castle similar to that. And it'll drive up. I mean, depends on how much I can make, but I would love to have a castle similar to that for sure. Yeah, no AC. It's this month has been the last month has been very hard. You're in the same area, Melissa. Humidity is not usually like this for this long. It comes and goes, and it's definitely sticky more than it's not. But at least we usually get a break for a couple of days here and there. We have not had a break from this in about a month. This is this has been rough. Like I went to my old roommates last night because they have AC. It was just nice to not have to just melt in the middle of the night. Like I have a fan on in my room, and that doesn't even help much. Moose, I love this. We have a family FI fund. It stands for F it. Means we can just say Sada and let's buy something. Took us years to get there. We're so lucky. Uh, work must provide a pension here. Yeah, that's a good one too. I'm almost at that F it moment myself in doing that, but that's where get the FU money, then you can say F it. But yeah, that's awesome. It's great to have that kind of investment going on, so that you can just go ahead and do that. I opened an investment account on behalf of my son when he was 2, and he had managed since now 30, has more than I do. That's another great idea. And I didn't know enough when I was younger. And this is another thing I would love to teach people is open up accounts for your kids. And if you have a side hustle, as long as you're making enough with that side hustle, you could put money into an IRA for your child. And you can write off, depending on where you're at. You always have to check with your accountant on this. But for a side hustle, you can write off your child a certain amount as an employee. So it could be up to $7,000 in some places. and you could take a chunk of that money that you get back in taxes and put that towards your child's IRA. So you keep on doing that. And again, by the time your kid hits 30, they probably will be more wealthy than you are. And that's awesome. That's absolutely amazing. There's no better way to help your child get started than that. What's going on, Sal in Chicago? Let's see. What else we got going on? Oh, PPI. We'll take a look at that because I know that information's out too. PPI expectations. Let's see here. Come on. All right. PPI expectations. And now what I've noticed about the PPI is it's usually a leading indicator for CPI. So, last month we were at a 1.1%. We're forecast at 0.4%. So this is what producers are paying. So like for me, I'm in retail. So this is what we as a retail company would be paying for. So this is the products that we are purchasing from our vendors. This is the prices that are going on. So that dropping down to 0.4% means that our costs are coming down significantly. That in turn, again, then goes to the CPI, which is what retail and us as consumers would be paying. So that in turn should be dropping as well. We know it never drops the same amount as that because they always want to make more profits. I see our numbers like if our price goes up by 10% from our consumer or from our vendor, then we will raise our price more than that. It usually goes up like 10 or 15%. So, you guys as consumers pay a lot more. So it's not always exact, but it will go up and down and fluctuate with it. So seeing the forecast coming down significantly is very nice. Let me see what else we got going on here. Yeah, and profit after inflation, that's a big one too. And now again, looking at the CPI and with inflation coming down to a 3.1%, like people before when I was getting my CDs, I was, getting 4 to 4.5%, but inflation was still like 6%. So I was technically still losing money. But I wasn't losing money as fast. Now it's flip-flopped. Now I'm getting about 5 to 5.25%, and inflation's down to 4%. It could be dropping down to 3%. So with that inflation coming down, continuing to get that 5%, I'm now making money again. Just had to be patient on that. What else? Let me see here. We've all got one kid. Yeah, I've got one kid. He is spoiled in a good way too. His mom and stepdad are very good to him. He's really a good kid. So, I try to keep him in line, typical teenage kid, but he's a good kid overall, and I want to make sure I keep on instilling that in him. But I don't want to spoil him. I want to make sure he works, and he works his butt off at his job. So as long as he continues to work hard, he works hard at school, he works hard at soccer, he works hard at the things that he puts his effort into. So I want to keep on encouraging that. So Raymond, not clear why Tesla stock down today. It started positive after opening. At opening, after two analysts upped their price targets. It's just because it's been overbought a little bit and it's just coming down. That's all. It's really just a little sell off from that. And again, as Melissa said, it's all the bigger players are coming down. So I think all the top names are starting to sell off a little bit because they've run quite a bit. I mean, Apple has been way up. I mean, just the amount of 52-week highs that we've been hitting in all of the bigger tech stocks. It was just time. People are taking their profits off of those, especially because we've got big tech earnings. So between CPI and PPI this week and then big tech earnings starting the following week, people are just starting to take a little bit off the table right now in anticipation of a potential sell-off post earnings. Spoiled cats. I don't know, David over there. Can you invest in your cats? Can you start IRAs for your cats? That would be awesome. Stop all that buying to cause the overbought. Sorry, I buy every single day. I just keep on driving it up. It's my bad. Do you think depression worries now has vanished in the sand? Depression, yes. I don't think depression was ever really a problem. Recession, yes. And I do still think we are going to be getting a recession, whether it's just an earnings recession or an actual GDP recession. I'm not sure, but I think it's going to be enough to pull the market down. So I do think that's going to happen. again, we're still trending in the direction where interest rates could still be going up. They're going to stay high for a while, and high interest rates for an extended period of time are going to truly punish a lot of up and coming companies that, or companies that are struggling to get by, because that's a lot of interest and debt they're going to have to pay in the future. What a zombie company is a company that doesn't even have enough revenue coming in to pay off the interest that they owe on the loans that they have taken. So when you can't even make those payments, you're just heading straight down into the toilet and you're going to be going upside down. When you have companies that are like that already, and they have significantly higher interest rates that they have to pay on any loans they want to take to potentially pay off anything else, if they don't have projections to get themselves to significant revenue very quickly, they're going to go under. We are going to see a lot of bankruptcies in the next 12 months. Okay, meant recession. Yeah, yeah, yeah. So depression, I mean, honestly, if you're looking at things cyclically, man, every 10 years we typically get a recession, and then maybe it's every 100 years we get a depression. Maybe it is that in 10 years we get something even more significant that comes through that causes, just like we saw back in the 1930. I don't know. I don't want to think that way. I want to think that we've become smart enough to, just we can have those cyclical recessions coming through to kind of flush out the zombie companies and the dead weight and then move forward. That is as proven to be relatively healthy for the market. So if that can happen, that's fine. I'd rather not see a depression, because that's ugly. I mean, we did come out of that, but like, what did we have to go through to come out of that? I don't think it's necessary. I think we could be smart enough to not make that happen again. Yeah, it'll be interesting because the Fed takes the break in August until September. So yeah, so July is going to be the last FOMC meeting until September. So another reason why, if we get that rate hike, do they just raise rates again in September? Because we're going to get August CPI, we're going to get September CPI before we end up getting the FOMC meeting. It could be an ugly quarter. Typically, the second half of the year is usually good for Tesla, but last year it wasn't. But maybe this year it is. Maybe this year we're going to get a little bounce. We rally and we push up to the end of the year before the entire market starts to pull back. Again, time will tell on that one. Let's see. What else do we have here? Oh yeah, the month over month PPI. That's important too. I'll pop that up here for you. So this one here is a little bit more interesting on the month over month. So looking at it, we've got last month we were at negative 0.3. This month we're forecasted at 0.2. So going up, it's been kind of flip flopping and staying in the same. So again, 0.2 isn't bad. If we stay steady at 0.2, that's fine. And we just have to wait and see what we're going to get. But this comes out on Thursday, so we'll pay attention to that one when it drops. But yeah, just CPI, PPI, and then of course the Fed prefers to use the PCE data, which that comes out at the end of the month. That's going to come out after the FOMC meeting. But paying attention to jobs is very important as well. I was talking to one of our customers at work, and he's still struggling to find people to help him out. Right now, we are in an employees world, and it's very hard for employers to get employees. Employees are basically picking and choosing what companies they want to work for, and they're dictating what kind of money they want to make. That's really where it's at right now, because employers are struggling to find people. And while employers are like cutting payroll is usually the first way they go to save money. If they don't have enough people working, they can't make any money at all. So they need to get these people. But when it comes to capitalism, they don't like an employee's world, because they don't like employees dictating how much we have to pay and doing it all that way. The employers want to be in control. The employers want to be able to say, okay, we need to trim some of these employees down. We can get rid of those. They want employees to be coming to them. They want an overabundance of employees coming to them. We don't have that right now. Employers need to be able to go out there and dictate, hey, this is what we're going to pay you. If you're not happy with it, go find somewhere else. That's what they want to have. And so that's kind of what we need to get the market back to. And I think internally, that's what the Fed is trying to get the market back to, is that state. And while they don't want to cause high unemployment, they still want to get us to a rebalancing of that state. And then when you're looking at here, Tesla hiring temp drivers for the summer analyze their car performance. So far, 2,700 people applied. Oh man, I didn't even see that. I should see that. I should see how much they're paying. I would totally do that. That would be awesome. Um, and when you're looking at it, this is why when we were talking about Berlin and Tesla, it's not just the US, it's a lot of countries around the world are in the same place when it comes to employees. And over in Berlin, Tesla was one of the few companies that was able to bring employees in because people want to work for Tesla. So that was another great fundamental sign for me, was the fact that a lot of these employees want to work for Tesla. And it wasn't just the engineers, it was Tesla as a company overall, just working on the factory floor and everything. What Tesla provides is what people want. And that was huge. And that to me tells me that Tesla is going to be that company that they're not going to have to worry about the employees like other companies are. So when people do end up losing their jobs, Tesla will have a bigger pot to choose from when it comes to bringing people on. So Tesla will not have a problem, or should not have a problem, when we go through any issues that we may see in the next 6 to 12 months when it comes to hiring. And that's a big piece, because if Tesla was struggling to hire, if you can't produce cars, you can't make money. And that's a big problem. And it does not seem like Tesla is going to be having that problem. You know what I haven't seen? I haven't jumped onto Twitter too much today. So I did, one of my friends, and I told you guys I was going to try it. I jumped onto Threads just because I'm like, what is this like compared to Twitter? Because I love hearing what people have to say, but I want to try it out for myself. So I'm on there. If you guys are on Threads, you can go ahead and follow me. It's the same as my Instagram account, Oracle Investments with a 0 as an O. I'm just testing it just to see what it's like for Twitter. I definitely prefer Twitter overall for a multitude of reasons. I'm not a fan of Zuck and all of the crap that's there, that he stands for. However, I'll try it out as a platform. Y'all seen Rivian skyrocket lately? Yeah, so Rivian's up. Neo jumped significantly today. So actually, it was funny because yesterday somebody had tweeted out that the charts for Neo pointing that it was ready to skyrocket, and sure enough, it jumped up significantly today. Square, same thing. And again, I think these are a lot of the companies that people are taking money out of the bigger tech stocks and putting them into these other plays that have been beaten down for a while, like the Neos. Rivian, Lucid jumped a bit too. So, yeah, it's just moving. And so even in the EV space, so people are taking it out of Tesla, putting it into Rivian, putting it into Lucid, putting it into Neo. That's their way of swing trading within the EV sector. What's going on, buddy? Can Tesla dip under 200 euros? Not sure what that calculates out to in dollars, but I would imagine I think they're probably about the same. I haven't even seen the recent rates, but I think it can. My personal take is I think that we're going to get a macro pullback, and that macro pullback is going to end up causing Tesla to dip significantly. So I don't know if this right now is the downtrend. I don't know if we're going to see that sub 200 before the end of the year. I just put out, again, my Tesla Nair video with all of my updated price targets, and my price target for the end of this year is $275. That's up from $247 where I had it. Now, when you're looking at price targets in the near term, and as far as I'm concerned, 6 months is near term, very, very hard to try and predict that. So much uncertainty, so much with the macro environment, so much manipulation. The only thing I can say from my price targets is the trend should be going up, and should be going up significantly as the decade goes on. That is the most important takeaway. And even when you look at anybody's price targets for the next 10 years, for whoever does actually do them out that long, just look at the trends. So whether it's going to be, in your opinion, bearish or bullish, too high, too low, whatever it is, take a look at the trend. And if you see it trending upwards, what kind of trend does it have? Is it a trend that is strong enough case for you to think that, hey, I would like to have my money parked into this company in that next 10 years, because that trend that it's on is going to take us to a place where we're going to see some significant returns. And for me, that's kind of where I'm at. And I'm really right in the middle. I've seen some people who are significantly higher. I know Warren Redlick has like $7,500 price target for 2030. I'm at significantly less than that. So I've also seen people who are lower than me. I've seen people who are around the $1,000 mark, and I'm more than double that. So again, just look at the trends, put everybody's pieces together, and if as long as you're happy with what you think you're going to see, then you're fine. Neo was not justified with that large drop from around $30 to $9. They will come back. Yeah, I bought in. I made some money on them. Still kicking myself because I was in with them at $4, sold at 5.50, bought back in at 4.20, bought more at $2, and then it took off, and I sold it at $5 again, making some good profits on it. And then from there, of course, it took off to over $60. So I missed out on significant upside with Neo. And then, of course, it tanked from there. I didn't learn enough about the macro environment. I lost some money, so I'm upside down. I haven't sold it, but I am upside down on Neo at the moment. I brought my cost basis down to $22, so I thought I am kicking myself. I wanted to buy back in around that $7 mark, and I did not. So kicking myself for that one. But hey, I think they will rebound because I don't think China's going to let them fail. In Germany, there are many Teslas. How many stocks do you have from Tesla? I've got 71 shares, and it's awesome to see that. I was thinking about that on my drive home today. I'm just seeing more and more Teslas all over the road, like everywhere. Like just a year ago, I used to be able to drive from here to my son's house, which is about 45 minutes, and I might see one on the highway, and then on the way back, I might see one. Sometimes there were days where I didn't see any at all. And now I'll see, 10 to 15 of them every single time I'm driving. Significantly more Teslas on the road right now. And that's crazy because even in Connecticut, like, in some areas we've got the money to buy them, but Connecticut still won't allow a Tesla delivery center to come up. It drives me nuts. I either have to go to Rhode Island, Massachusetts, or New York to get mine. And I'm like, dude, Connecticut. I'm like, you're all about, being on the left, and you're all about making sure that we have, good environment, but you're not going to let Tesla come in. And it's because they're stuck in the whole situation with legacy auto. It's ugly. I don't like it. Let's just hope that the war in Ukraine will end soon and that Putin will not be crazy enough to drop nuclear bombs. I don't think it'll happen, but I mean, you are over there, so I don't know if you guys see it differently. It's funny how I was, discussing, or I saw a tweet about somebody talking to their friend in China, and the people in China are like, they don't watch the news because they know it's all propaganda. So how much here is or not, I don't know. So I don't know if we get the true sense of what's happening over there. I rarely see anything about what's going on in Ukraine anymore. Sort of like COVID. It's like, all right, that's yesterday's news. Even though it's still going on, they're like, oh yeah, that's not important anymore. That's not the hottest topic. We're going to move on to something else. Like, all right. So hopefully it does end soon for everybody who's over there. Randall, what do you think about Palantir? Do you think it has potential or it's all hype? I think it has potential. Actually, I need to finish watching the video. Peggy interviewed Amit about it, and Amit, he has a wealth of knowledge on Palantir. So if you are interested in that, definitely check out that video. So look up Curious Peggy, where he's talking about Palantir. Highly recommend that one. I owned it. I just sold my last 5 shares because just looking at the charts, understanding what's going on, I think we're going to get a pullback. Now, there's a gap down to $10 on Palantir. Actually, I'll pop it up for you guys here really quick so you can see. That's right. I changed all that. All right, let me get this on the screen for you. And you guys feel free. I do obviously speak mostly about Tesla, but I am invested in many other stocks. And if you guys have any questions, I have no problems answering anything about other stocks as well. So here we are looking at Palantir. They've got this massive gap. Oh, why is it? Oh, yeah. So they've got a gap down here in the $10 range, and then a massive gap down here to the 786 range. So my thoughts on Palantir are, I don't know if we're going to come down and fill this gap. It's a big gap, so it might fill if we get that massive pullback that I think we're going to get sometime later this year or early next year. But I do think we are going to pull down. So I have an alert set up for $12.50. I'm going to start adding around that level at $12.50. So that's right around here. So right around this level here, I'm going to start adding if it gets down to this level. Again, running back up today, I mean, it just keeps on pushing up. Like, it was significantly overbought for a while, sold down, and kept on pushing back up. And we're now getting closer to overbought again. Looking on the weekly, we're still overbought on the weekly. Monthly, we're still at 59. So we still have some room to grow if need be. So again, I don't know where we're going to come down to. I like Palantir long term. I just wanted to take some profits because I was trying to free up some money for some other things. And that's what I did. So I took my profits and I will just now wait and see what happens. But I do think Palantir is legit. The only concerns that a lot of people have with Palantir is most of their contracts are government contracts. They are opening up a lot more contracts with other people as well. And it's always good to have government contracts, but you never know when the government's just going to be like, all right, we're going with somebody else, and they dump you, and then you're gone. So that is a bit of a risk and concern, but Amit may address that in that video. In Germany, autonomous driving is viewed critically. What do you think about it? Actually, I was going to ask you. You tell me. Like you say it's viewed critically. What when it comes down to like regulations? I know in China, it's not openly regulated, but they are allowing it in some areas. In the U.S., it goes state by state. Some cities have it already, like San Francisco. I think Phoenix or somewhere in Arizona has it. So there are cities that have it already. There are states that allow it, other states that don't. So when they're reviewing it critically, are they, so does that mean that it's going to be a while before we end up seeing full autonomy over in Germany? Obviously we don't even have FSD over there yet at all. So it'll be interesting to see how that goes. Cause I know the roads over there are significantly different than here in the US in many cases. So it'll be interesting to see, how they end up rolling it out over there, if it rolls out at all. What do you think about Zaitis? I have many stocks on them. I do not know that. What's the, actually, I wonder if I could look it up this way. ETFs. I honestly do not know anything about the company. Let me just jump into the charts here and I'll tell you what I can tell you from a charts perspective specifically. Hopefully this is what you're talking about. This is the only one that popped up. We've got a gap above here. So I have a feeling we're going to fill that gap. I mean, it just saw a nice jump today. So you're probably going to end up seeing that go up even more and fill that gap above it. I mean, RSI is right in the middle on the daily. You've got tons of room to grow on this stock. So I can see this one pushing up. Looking at it's making, higher lows over time. It's definitely on a nice upward trend here. So again, not knowing anything about the company itself and just seeing it strictly from a chart standpoint, I see it looks like it has some room to grow up. So I think it'll be fine because it looks like, yep, it's making higher highs and higher lows. So it's definitely on an upward trend. Mercedes has level 3 driving, but is speed limited to like 50 kilometers. Oh, that's interesting. So they govern the speed on it. Okay. How's that working out in German Autobahn? So yeah, that's actually interesting. So they've got the level 3, and level 3 is one of those levels that is almost going to be skipped by most people. So I'm actually surprised Mercedes even is there. But yeah, Tesla is just shooting to scoop right past that. Katie, SoFi earnings are coming up. Do you think they will hit or beat expectations? SoFi it was beat down, but then it popped very nice recently. So I did sell out of mine and I started buying back in as it dipped back down under $8. My cost basis is $7.87. I don't know. I really don't know what's going to happen with SoFi. I think they're going to be fine long term. I use them. I like their credit card. I like their platform. They have a lot to offer. They got a nice bump when the government announced that they're going to be reinstating the student loan payments. Interest kicks in September. Payments start up in October. I don't even know if I mentioned it before. That's another catalyst that I see coming for when it comes to the whole entire market crash coming. And I don't know, again, I don't want to call it a crash, but I think we're going to get a massive pullback. And that is strictly because of the fact that student loans are a huge expense that people haven't had to pay. Some people have been paying still along the way, but having that student loan relief that they didn't have to pay it, now the interest is going to start kicking back in September. If they hadn't been paying, they're going to be paying significant chunks of money starting October again for these student loans. That means a lot of money is going to be going back into the student loans rather than into any other extra spending that people are making. So there's going to be a huge pullback in spending when it comes to anything that's not a bill. So I think we're going to see a lot of that as well. Tim, for the love of God, please stop teasing the ladies. What a hunk. I'm not trying to tease, man. I would love to find one. I would love to find a woman. Hey, when I was out at the baseball game with my son and his friends on Saturday night, I was wearing my shirt that said DILF, DILF. It's devoted, involved, loving father. I had a very cute girl smile at me, and I didn't get a chance to get her number. So I'm looking, not trying to tease, just waiting for the right one to take advantage of this opportunity that I believe I present. I would like to add some value to some lovely lady's life. David, didn't Mobileye plan to launch pilot robotaxi service in Munich, Germany? Oh, that's actually, I didn't even hear about that. I think you're right though. I think I did hear about that. I think we were talking about that last week actually. So I don't know if that ended up happening because Mobileye partnered with, was it Mercedes that they partnered with, or Audi maybe, or VW? I thought they had partnered with somebody for that. So yeah, so let me jump into this quick because TSLY. So again, this is what I was chatting with Gort about. So he and I have this strategy, and Gort has been awesome. If you guys don't follow him on Twitter, definitely follow him. And we've been chatting about TSLY, the opportunities. He brought up a whole lot of videos, looking at both sides because I did my own research, but diving into other people who did it. There's a bunch of videos on YouTube as well. If you guys are interested but want some more deeper dive information on it, definitely check them out. There's a few that I had seen. Highly recommend them just to get, I saw both perspectives. And the expense rate is very high at 0.99%, but the return on it is significant. The one video that I'd seen was from a month ago, and he was pointing out that it only had a 44-cent per share return for dividends. Still high, but that was coming down drastically from the beginning of the year when it started. But now we jump back up to $1.06 per share. So if it's back up to $1.06 per share, where's it going to go from here? I don't know. But knowing that the X date was last week and people are selling off today, I added a little bit more, and I'm going to wait for earnings to add more because looking at the chart on it, I mean, it dipped down. Now it has this giant gap up here, but it has like gaps down here. It has gaps all over the place, very similar to Tesla itself. So it almost gaps along the way. So the way we have discussed it and seen it is if Tesla stock itself is going up, it's good to be in TSLL or TSLA. TSLL goes up 1.5 times the speed of Tesla stock itself. If it's coming down or going sideways, it's good to be in TSLY. Now, coming down, it's not going to come down as much as Tesla stock it does on a percentage basis. So dollar cost averaging on the way down is not a bad idea because then you can get the dividends on it and you could be making money. Even though it's losing money, it kind of offset that with the dividends that you get paid in. Then when it trades sideways, you'll be making money on it as well while nothing is happening with the stock itself. Then when it starts to go back up again, you can then put that money that you're making into TSLL or TSLA, whichever one you choose, and then go with that route. So this is kind of a play that he and I have been talking about. Again, none of it's financial advice, but this is what he and I were talking about, some opportunities that we could be seeing there. Because, if I had put, I think it was $20,000 because I've got a bunch of money in CDs. So if I pulled some of that money and put it into TSLY, I'd be pulling in like $1,176 a month just from the dividends on it based upon the $1.06, which yes, of course, is the highest they've ever paid. But even if I pulled in $1,000 a month from $20,000, like it's pretty good. $20,000, $1,000 a month, that's $12,000 a year on $20,000 invested. That's a lot of money. Now, over the long term, that expense is going to be very high. So you're going to be paying quite a bit in expense numbers there, the expense fees. However, it's not really set for a long-term play. Get in, get out. And again, I think the next 6 to 12 months, if we get that pullback, it's a great time to get in. Then when we actually do hit that bottom, when you get the true turnaround in the market, then you can start adding, taking away from that slowly, putting it into, or you take your dividends from it and putting that into TSLA and TSLL to let that grow as well. Because as you're going up, you're not going to make as much money on TSLY. Just some thoughts on it and how we are playing it. Isn't Tesla only passing level 2 and just entering level 3 when you see it from a realist perspective? So realistically, I mean, yes, but I think Tesla is not even concerned about level 3 just because the difference between level 3 and level 4 is what was it? I think level 3 is hands-on, but you don't have to pay attention or is eyes on the road. Oh, yeah, that's what it was, is level 3 is eyes on the road, level 4 is you don't need your eyes on the road, and level 5 is you don't need a driver at all. So, what's the difference between having your eyes on the road and not having your eyes on the road? Truly doesn't matter. So, I think Tesla's just going right for the point where we're gonna go to level 4, which is you theoretically won't need a driver, but they're gonna have one in there just for safety purposes anyway, until they get themselves so safe that they don't need to have a driver, and that would be level 5. So, so theoretically, yes, Tesla's entering the point where it's level 3, but they're focused on skipping right past that. What do you expect next week from the quarterly report from the stock Tesla? I've got to check my EPS again. I'm right around, I don't even, am I at a dollar? Gosh, I can't remember if I'm at a dollar or not. I will double check that for you guys. I have got to see that because I don't know where they're going to hit. Margins are going to be the big one. I don't know if I think EPS is going to matter, but I think margins will be a bigger factor. And that 19 to 20% is what they're looking at. If Tesla comes in with vehicle margins that are under 19%, it's not going to look pretty. If Tesla comes in with operating margins, that's a big one too. If operating margins are around that 14%, that's not bad. If it comes in under 14%, could be questionable. I will wait and I'll definitely report the end of this week as soon as I see it, what the analyst expectations are for these numbers as far as I can see them. And yeah, I sold all my other stocks and went all in on Tesla like Peggy. I know I was talking to Peggy and he's like, oh man, I spent so much on Tesla stock earlier this year. He's like, I've got to cool it a little bit and save some cash up just in case. And again, for most people, I know some people are out there who still, they bought in when it was at the peak at like over $400 and they're still way upside down on it. But realistically, do your own thesis on it. If you think that we are going to see a stock price very similar to what I have for my base case scenario, even being at a cost basis of $400, you're still going to get a very nice return. It may just take a year or so for you to go back green based upon what I see. But in the long run, you'll be perfectly fine and you'll still be happy in 10 years that you were in at $400. That's just my thought. Hanif, there he is. There's my man, my potential financial suggestion guy. Let me see. And I thought there was something else I had seen on Twitter. The hard thing is like once you get delivery numbers, it's usually like the last week of the quarter going until earnings. It's a blackout period, so you don't get a lot of information coming out. So I haven't had a ton of stuff in the news. So it's me so sorry. Oh, goodness. Looks like it's bedtime already. It's only 5:15. Golly. But it is humid here. It's been like dark and raining most of the day. It was pouring this morning. I poured on my whole ride home. We had a nice shower come through this afternoon. It was like perfect to nap for, but I didn't get a chance to take a nap. But it's nice to have the rain. I just wish the rain was actually like going to cut this humidity. Could you please explain what EPS is in simple terms, please? That is earnings per share. So that is the bottom line, what Tesla has brought in for operating income based upon how many shares they have. So I'll actually bring up the formula so you can see it here. It's a pretty straightforward. They don't have well, there it is. I guess you could take a look at this one. Well, that's not simple. I'm trying to do it as simple as possible. All right, I'll use this one. Let's pop it up here for you. So EPS is earnings per share, again, calculated as a company's profit divided by the outstanding shares of its common stock. The resulting number serves as an indicator of a company's profitability. That's really it. So you look at the company's profit, again, that's the operating income, and you divide that by the number of shares that they have outstanding. And so if we're going to look at Tesla's outstanding shares. We'll take a look and see what they currently have. Tesla shareholder deck. So the most recent, the Q1 earnings, they have, where is their outstanding shares? Oh, that's right. They changed it this time around. It's not in the same place as before. I'm getting there. I'll find it. Hold on. Let me pop it up here for you. All right. Stays sales outstanding. No, where's outstanding shares? Stock-based depreciation, millions. Sorry, they moved it this time around. It used to be right at the top, and they don't have it anymore up there. Oh yeah, here you go. Shares used. So this right here. So Q1 of this year was 3.468 billion shares. So you take that, and that's what you use, and you divide it into their operating income. So hopefully that answers the question for you. But that's how you find it in the simplest terms. That's just it's number of shares, the operating income divided by number of shares. And again, that's like because we're all shareholders, we all get that's like our little piece of it, kind of. So per share, every share that you own, it's like that a small piece. Randall, I'm in Connecticut. That's where I'm in, and I'm in the state of humidity right now, but Connecticut. Yeah, dip on earnings possible. I'd like if it happens. Me too. I still add every single day, but I would love to see a dip on earnings. Yeah, I would love to get another opportunity to buy some more. And again, with this TSLY bringing some serious dividend cash in, don't know how long it's going to last, and I want to take advantage of it as long as I possibly can. So yeah, I would love to see a little dip. And I know some people get so mad at me when I say I want to see a dip, and I'm like, dude, I'm a little guy. When you guys, man, some of you like David, some of you guys have been with me from the beginning. I remember somebody had asked me how many shares I had. When I started this channel, I think I had 3 shares. That's it. That's all I could afford. I had a very small account. I had a very small portfolio, and the majority of it was still Tesla. And I'm like, I only have what I have. And now this is pre-split. So, for me, it was costing like, I think my first share was like 750. Then I bought in at 900. So I was trying to thin out my portfolio to try and get myself as many shares as possible. But for me, it was still super expensive. Like spending $900 on anything, like I bought a laptop for, $1,200. And I'm like, it was a share of Tesla stock or a laptop. Like that was my choice. And that's a big financial decision for me. But then, I just kept on adding. Then I started to do the fractional buys. So I started by putting in $20 a month. And then it started to go up. I paid off all of my debt in the meantime. So once I did all of that, I started to go, more heavily into it. So then I got up to $25 a day into it at some point. And now I'm wise with it, but now I'm up to 72 shares. So even post split, I think I ended up having 12 shares. But since then, I've been growing and growing and growing. So, that's what I do is just keep on adding every day. And then now I've learned enough about the stock and the movements of it, understanding the macro environment, hoping for that pullback. And that's when I'm going to add some heavier. Karav, what's going on, my friend? Karav is my production boy. Yeah, 72 is where I'm at right now. In my main, I'm at 71 in my main portfolio. I have 11 in my IRA. I've got TSLY, a few hundred of those. TSLL, I just sold a little bit of, and I'm going to be just waiting for the bigger pullback to add more to TSLL. So if we get a sell off post dip or post earnings, I'm going to see why we dipped. If we dipped on good earnings, I'll probably add heavy. If we dip because it was a Wall Street miss, like we missed because Wall Street, didn't like what it saw, then I might not add heavier at that point. I might wait. Karav, no, I do not have an EPS estimate yet. I'm going to work on that tomorrow. Most all of my updates for my Tesla and Air video and price targets, that was all for annual stuff. So I have not gotten to the quarterly updates yet. So I will jump into that tomorrow. Yeah, TSLL is that one's good. It's definitely risky because it moves significantly more up and down than Tesla itself, and Tesla itself already moves a lot. But yeah, it's definitely worth getting into and taking a look at it. PE ratio. Yes, that is price to earnings ratio. So that is the price of the stock to the earnings that Tesla's bringing in. This one here is wild because this one is so much more opinion based. So this is, hey, where does some analyst feel that the stock should be going? How much is it going to be worth? So how much in the future? And when you're looking at future earnings, future PE, saying, hey, how much are we going to price in? So right now we're pricing in like 80 years of Tesla stock into it right now. So 80 PE seems super high, but for a high growth stock, that's about normal. So yeah, PE is so opinion based. It's so hard to go by because when you look at a valuation model, I can have all of my numbers run down the same as somebody else. But if I put on a 50 PE and they put on a 25 PE, that changes the stock price significantly. And that's all based upon what people feel the value is in the long term. So it's so hard. That's what the simple explanation for PE is, but it's again so opinionated. It's hard. Yeah, and as Karav says here, price to earnings is a common metric used by investors to judge whether a company is overvalued or undervalued. And yeah, again, that's why that's why Tesla varies so much because some people see Tesla as a tech company. They see it as AI. They see it as, the future with Optimus and all these other things. So they're like, hey, we need to put a bigger tech-like PE ratio on this company. Meanwhile, there's others who are like, Tesla's a car company because that's all they currently do right now is sell cars. So they should have a PE ratio that's closer to something of legacy auto, which is also not true. So I try to go somewhere in the middle of those two because Tesla is not currently doing all of the future endeavors that they're talking about, but they are working on them. I think that they will get there. They're just not there yet. But they're clearly not just an automotive manufacturer. So I need to value them higher than legacy auto. So I put mine right in the middle between 40 and 60, depending on the year and what's going on in the macro environment. You also have to take the macro environment into account because every macro environment, as we saw last year, rising interest rate environment compresses PE. When the interest rates start coming down, we should start to see compression relieve itself for the PE ratios, and that will allow growth companies to grow even more and even faster because the PE ratios will start to go up again. So that's another thing to pay attention to going into next year when the Fed does make that pivot. They'll make the pivot, could take about 6 months for that to take into effect, and then we can see PE ratio starting to climb again. Honey, if yes, TSLY, that is the high yield max dividend ETF that is new. I did a whole video on it if you want to check it out. Yeah, it pays ridiculous dividends. I'm very happy with it. Let me see. Robinhood is now 24 hours, only a few choices, including TSLA. What do you mean by like 24 hours? Like you can trade 24 hours? Is not just, is it round the clock? I've never seen that because usually market ends even after hours ends at 8 p.m. Eastern time. And then it opens at like around 7 a.m. Eastern time as well. So interesting, 24 hours. I'll have to take a look at that because I do have Robinhood. I don't have much in there, but I do. But Robinhood is the only platform I saw that I could get TSLY on recurring buys for less than $5 a day, and it doesn't charge any fees for it. So as much as I wasn't a fan of Robinhood with everything that went on in the past, it's still the best platform I have seen for things like that specifically. I still like SoFi better though. Oh yeah, Croft, thank you. If anyone missed it, Tesla sold 74,212 cars in China in the month of June, consisting of 51,471 Model Ys and 22,741 Model 3s. They like those 7 4s and 1s at the end there. It's nice. What's going on, Robert? I'm late. I'll catch up what I missed after the live. Very happy Elon is acting out the Zuck cuck as he tweeted. We're gonna get a dip. Yeah, I do think we're gonna get a dip. And who knows? Maybe what's gonna end up happening is we can get a lot more FUD coming out. Maybe Elon does end up having a cage match with Zuck, and something happens, and people are mad at him for like they were mad at him for Twitter last year. All right, so they can't trade 24 hours. I'm gonna look into that. Thanks, Naeem. It's only me and you trading. I'll buy your shares and you buy mine. Perfect. Yeah, and that's the thing too. It's extremely low volume. Anything after hours, you can typically see bigger swings going on, which is why like earnings are so wild, because there's usually less volume that comes in after hours, and then you'll get like an earnings that comes out and it's moved significantly. And that's why if I ever see a company have good earnings and they hit the trifecta, which is they beat earnings, they beat guidance, and gosh, I can't remember what the other one is. Man, earnings, guidance, whatever. If they hit all three of them, and then the stock sells off afterwards, I'll buy in. I've made very good money on that. Typically, you give it a 3-day rule. You don't want to touch a stock within 3 days after earnings, just because it's still blackout periods. Nobody else does things. There's a lot of uncertainty going on. The volume is usually pretty low. But if I see something like that happen, I have had almost a 100% success rate on buying a stock, selling off after a good earnings report, and then it rebounds very quickly there afterwards, and I can make some quick profits on it. What's that photo and quote of Elon on your wall? That is, oh yeah, let me, there. Hopefully you can see it. But what it says is, I think that's the single best piece of advice. Constantly think about how you can be doing things better and questioning yourself. That is how I run my life. I constantly question myself on everything, and sometimes it does lead to myself kind of being insecure. But I always question everything I do. I question, how can I get better? How can I do this better? How can I perform better? And if you don't question yourself all the time and just think that you're good where you're at, you become stale. And we see that, and that's how Tesla operates. You know, Tesla is always changing regularly. This is why they have such an agile company. This is why I've actually used that whole mentality to become the agile investor that I am. I don't want to sit still in one place. I constantly want to move. Keeping my money in Tesla, I'm okay with that. But I want to move things constantly. I want to continue to learn how much better can I get at doing different things. Is just constantly trying to improve myself and how I perform. I can always become a better person, and that's what I'm always striving for. And that's just like my shirt here. Whoa, don't want to break my chair. Be a good human. Be a good human and constantly strive to become a better person. And yes, Stephen, exactly. That's how I got suspended from work. I was trying to improve. I was trying to help the company get better. God forbid I tried to make things get better. You get in trouble for that kind of stuff. I do not need to buy any stock other than Tesla. It's all for my daughter's future. CJ, that's how I feel about my son. The majority of mine, I do like to be more diversified, but I still have over 70% of my portfolio is in Tesla. Now, when I look at my entire portfolio, I actually need to do the percentage on that because I have a whole lot of stuff outside of my stock portfolio. But my stock portfolio is 75%, almost 75% Tesla. And so to me, that's the same thing. I want to build this for my son. I want to teach him about it. I want to get him into it. I want to have as much as I can to give to him in the future as well, and all of my future generations. Somebody, and I didn't tweet it, Instagram, I think I had seen a post about it, talking about Monopoly. If you played the game of Monopoly, I'm sure most of you are familiar with the game. If you've ever played the game of Monopoly, imagine trying to win the game by never buying any properties and just going around the board, collecting your $200 and trying to win. It's impossible. You cannot win that game if you do not purchase any properties. To me, that is investing, whether it's in properties, and I do recommend that. I don't have mine yet. I did when I was younger. I got divorced, other story. But that's what I'm looking for now, is to invest in real estate. You invest in real estate, you invest in whatever you can. Making those investments are what are going to help you generate long-term generational wealth. If you don't make those investments, you're never going to get there. Let's see. Any guess on earnings Wednesday? Yeah, we were just talking about that. I don't know. I don't guess. I'm gonna do my whole entire report tomorrow on it. So I'll try to have it done for tomorrow's live stream. So tomorrow, same time, 4:20 p.m. Eastern time, I will do a live stream and I'll try to have my updated report ready for then. And I'll share it with you guys first, and then I'll do a whole full video on it this weekend because I like to put that out before earnings. So, and I do have a live stream going on with Peggy this weekend as well, the 16th on Sunday. So we'll discuss more of it then also. But I'll try to get the earnings, all of mine updated. I just updated all of mine for my Tesla. So all of my price targets through 2033. Just put that video out before I came on live here. And so that was all annual basis stuff. So I'll do my quarterly one tomorrow. But I have a feeling unless Tesla comes in with like vehicle margins of 20+%, operating margins over 15%, EPS over $1, I think with all of that, if they don't hit that, I think we're going to see a sell-off. And again, macro environment stuff might squash us even more. So it could get even uglier. Just my thoughts. Let's see what else. Probably jump off of here shortly, but I'll keep on rolling here on Karov here. Okay, so now you're at 90 cents. Again, I'll run mine tomorrow and see. I know I've heard things of like $1, and I thought, 85. Okay, I thought consensus was 88 cents. So 85, that's still close. And we'll have to see what the Tesla compiled consensus is. I think that usually comes out on Saturday, maybe. Maybe a little bit after that, but it usually comes out pretty close to earnings itself. And then analyst consensus too, you have to be careful because sometimes when it comes to analyst consensus, like how many analysts have updated their numbers? Just like we've seen in the past where very few of them updated the numbers. You had some very old numbers that were worked into it. Like, does it actually count if they haven't updated it within months? Yeah. So I'll take a look at that. Let's see. That's all I've got here. That's that. All right, folks. I'm gonna hop off now. I gotta go make myself some dinner. And I'll try to get my spreadsheets updated for you guys so tomorrow we can get it all done. Again, tomorrow morning for those of you guys who jumped on late, and if you don't want to watch the entire live stream, I will do a recap video in the morning, just kind of going over some of the stuff we talked about today, right around 12 to 15 minutes, most likely. So I'll discuss that in the morning. Otherwise, if you guys want to see the whole entire live stream, go watch that too. I'm giving you options. So otherwise, guys, thank you all so much for being on here. Always a love.